Hello everyone, and thanks for tuning in for another market outlook by Exness. My name is Andreas Semstokleus, trading specialist here at Exness, and in today's video we are going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week, the idea was for a long trade on the ExxonMobil stock if it was to break above the 119.50 area. This level was not reached yet, therefore the idea was not triggered. Now, for this week, we have with us Michael Stark, Financial Content Manager, to provide the trading idea of this week. Hello, Michael, and thanks for being with us.
Hello, Andres. Thank you for inviting me on.
So what are your thoughts for this week?
This week I'm looking at a potential buy for crude oil, specifically American light oil, from around the current area of approximately 88.10 to 88.15, and the possible target might be around $92. And I think that's a possible short-term upward wave within the context of a larger upward wave. We can see that at the moment, after a fairly sharp correction over the last few days, the price is no longer within the overbought area, and it's currently testing the 20 simple moving average on the daily chart. So it's possible that zone might be a possible area of a bounce, and it might retest the latest high.
And what would you say are the narratives behind this idea?
The primary narrative, I think, in the long term is definitely the extension of the voluntary cuts by Saudi Arabia and by Russia. That's very important, that they've cut quite a significant amount of production, and it's likely that if the current situation continues, we might have a deficit in the oil market towards the end of the year. And it's also important in the shorter term to monitor, I think, the production from the USA, because while it's almost impossible for USA to make up the shortfall for production, still we can see that the American production is decreasing based on the number of active rigs. But I suppose the counterpoint to that is that Russia has to some extent eased its ban on exports of fuel, so that's something that's cautiously negative for oil. And we can also certainly highlight monetary policy, with many participants in markets expecting the Fed and other central banks to remain higher for longer. In particular for the Fed, it now seems unlikely that there's going to be cuts before July of next year, so we can contrast that definitely with expectations earlier in the year. So I mean, it's not very clear fundamentally which way it's going, but in the long term I think certainly the narrative is positive for crude oil.
And what are the economic data or events on the economic calendar that the traders need to pay attention to if they were to proceed with this trade?
The main one for this week is American GDP, which is happening on Thursday. That's a very important release, the final figure for second quarter GDP. And we're also looking ahead on Saturday and Sunday to Chinese PMIs, which might be important since China is the main consumer of crude oil. And we also want to look possibly at personal consumption expenditures, which is happening on Friday. That's probably not directly effective for oil, but is something that could be important for the US dollar. And since oil is usually priced in dollars, might cause oil to move.
So in summary, the trading idea for this week is a long position on crude oil with a potential target around the 92 price area. The main narratives are the production cuts lowering the supply and the Russian export bans. The economic data that could affect this trade are mainly the US GDP and the Chinese PMI publications that are going to be released later this week. Thank you, Michael, for providing the trading idea for this week.
That's okay, thanks for inviting me on.
Remember, this is not a signal, it is just an idea for a trade. It is not a guarantee of success. Always do your own research and remember to manage risks.